All right there, everyone. I am sure many of you are quite perplexed on the state of the economy and the market and inflation, and are looking for some clarity in the midst of all of the confusion. And my guest is genius is to do just that, to bring clarity where there is confusion. So our good friend Bob Kudla is back. Bob, I've been marking these interviews. I think this is your 15th or 16th time back. So welcome, my friend. It's great to have you. I should introduce Bob in case this is the first time that means you're new to the channel if you haven't been watching Bob's interviews. But Bob started Trade Genius Academy back in 2015 after 25 years as an executive for two Fortune 500 companies in the financial service industry. And over the past several years, Bob has amassed an amazing 65% overall win record in the market. So today's Bob's going to give us some insight into what sense to make of this crazy market, the new inflation numbers and all that. So Bob, welcome back, my friend.
Oh, hey, thanks, Dr. Steve. Thanks for having me.
Always a pleasure. All right, well, let's start with the obvious, with the inflation climbing higher than expected in June. I guess the price index rose 5.4%, highest fastest pace in 13 years. So what are you making of it? And do you think it's going to climb higher? And what stocks are you seeing perhaps as a hedge against this inflation and the like?
Yeah, so let's talk about that. I think they came up with like 5.5 or 5.9%, which is an utter lie. I think the best way to look at it is how much has rent gone up and how much has home prices gone up. And the inflation rate is somewhere between those two.
Oh, wow.
And those are the biggest markets to understand how many people are feeling about a price of something, and especially people that have assets, how they're protecting them in a very obvious way for people. And so, you're talking 12 to 30% growth there. The stock market is up 100% year over year. Okay, now if you take out the pandemic, dip, you're still talking north of a 30% move. So everything's tying in to say, hey, you know what? This inflation rate's probably running 20% or better.
Wow.
And look, I don't have to tell you that. Just look around,
right?
And the things you want to buy. The obvious thing to us is personally is just going out to eat. It's essentially doubled, right? And then you have just anything that you want to buy, if you can even get it, because you're having basically a shortage in the supply chain. So one thing I want to just tell your listeners, because they're going to play a bit of a shell game on us here. So prices go up 20. Let's say we agree that it went up 20%, but next year it doesn't go up at all. So they're going to tell you, they're going to ring the bell and say we killed inflation. And you're sitting there going, well, my income didn't go up, so I'm still 20% poorer than it was a year ago. And these guys are, they borrowed George Bush's, mission accomplished sign, right? And then they're just going to keep on piling on the asset purchases. It's the games that they play. So we're basically getting to what's called a higher level of cost. And the word I like to use is, I call it an inflationary depression, because it really doesn't matter what the price is. It's just that your delta of affordability is falling away from that price. And the more in demand those items are, the less you're going to be able to afford them. So what you're going to see in the markets is a bifurcation. Basically, if it's a have to have, you're going to be shifting more and more of your income towards those items. And if it's a nice to have or want to have, you're going to be shifting down from those things. So if you're, from my standpoint, looking at the stock market, so it already helped me understand that I don't need any more, quarterbacks. Now I'm looking for defensive backs, so it helps you, in terms of recruiting the sectors that you want to go in. And when you live your life, it's telling you, if you're in an industry that's likely to be a nice to have, you better start looking really hard for getting into an industry that's a have to have. And so you're gonna see that. And now you may be lucky here because we're gonna have some labor shortages, and those are chronic too. So if you just allow me to jump all over the place for a second,
Go
I'll
for
try
it.
to-
Yeah, absolutely.
So we have a permanent 12% reduction in the labor force because many people retired, and they retired early, and they're not going back to the workforce. You remember, you can start picking up Social Security at 62.
Right.
You know, it may be it's 7% more every year as you get up towards 66 and 70. But some people might be saying, you know, I have just enough, I'm out. Or I live in a high cost state, I sold my house and I went to somewhere cheaper. So we basically have a permanent reduction in the housing market. I mean, in the labor market, and then we have a skills gap. So you know, if you're a young person or a middle-aged person and you have a skill, and the companies are going to need it, you're going to be able to dictate wages. And the government's coming in and they're saying, I'll pay you to do nothing. So if you're a low skill worker and you don't pay enough as an employer, you're in trouble.
Right.
So we have this really weird situation where labor rates are probably, the most part, aren't going to go up much more than, you know, that $15 an hour where they want to settle on, but the costs are going to go up much higher than that. So we're just going to have this separation. So if you want to get ahead of the game, you're going to have to be in assets that are going to run hotter than the market. And now look, we've already hit nirvana. You know, right now, I was telling you before we got on the air, is that in the last week or so, I've really pulled back on the trades because you just don't know if you're going to step off a cliff one morning. And we had a little bit of one twice now, 2 weeks in a row. We've had these out of the blue just dumps last Thursday, and we had one get a little bit on Tuesday. It's just that it's going to be, you're going to start seeing more of those things. And so people are going to start getting frustrated, and they're going to start calling their brokers to say, hey, get me out of these trades. And the way stocks are structured in these ETFs is that could cause a cascade.
Yeah.
So from my standpoint is, and nothing will get away from it. So everything will kind of get pushed down with it at first. And then these inflation adjusted assets will rise fast, like gold, silver, platinum, palladium, uranium will all move up. But there's no sense being a hero and trying to buy these things at the top. You know, It's okay to wait a week or two before you deploy your capital, and let's see what shakes out. And so that's kind of how we're looking at it. And this is not a short-term thing, Steve. This is I think going to be our world for the next 6 to 12 months in terms of just a lot of fractures.
Wow. And you were mentioning before when we were talking off camera that this was the dumps are indicators that people are they're pulling out, they're getting nervous, especially we could transfer over to make a pivot over to crypto. Is that what's basically going on here?
Yeah, I mean, look, there's what's called smart money and dumb money. And it doesn't mean somebody's smart or stupid. It means I'm an insider or I'm an outsider. And so the insiders have been dumping since basically January, and it's just been accelerating. Right. And so they're moving out of the market. And in the middle of this, you have this Reddit Wall Street Boys thing where people are going onto these sites and trying to, be a hero,
beat the hedge fund managers,
right, going after the hedgies and stuff like that.
Yeah,
and that works for a while.
But then what
they're doing is they're the dumb money filling the void. While that thing shoots up 20%, some rich guy goes, "Thank you very much,"
right,
and they pull out. And so everybody's on these options now. So everything, when you're on an option, you're just leveraging 10 to 30 times. So all they have to do is do a couple downdrafts and you wipe out retail. And then there's nobody left to buy. So that's what's happening in the stock world. And on the crypto side, if you want me to pivot to that, because I think some really interesting things are happening. It's also affecting gold and silver. Crypto's predicting what's going to happen in the stock market 60 days ahead. So if you noticed in May, crypto went 64,000 down to 27 or something like that, stabilizing now in the low to mid 30s. And so basically that's a 50 to 61% retracement, which is, believe it or not, a normal retracement for a move. It just happened to be really big move, 8,064 back. So, in this range, 30 to 40,000 is consolidation right now. And so they'll do a couple scared of children moves down, and they'll buy those things back. And then basically we're backing and filling for a couple months. I think that's going to last for another 60 days. And here's why. So I don't know if your listeners have ever heard of a phrase called reverse repos. Basically what it is, the banks have these excess reserves, extra cash that more than they're required to keep in order to satisfy the regulators. Well, normally they would take those excess reserves and they would lend them out, but there's no good borrowers anymore. People who need money shouldn't get money, and people who don't need money aren't going to take the money.
Right.
And so now they don't know what to do with this cash. And so at the same time, the banks are saying, I don't want you to speculate in that because we're trying to tamp down this animal that we created with all the spending that we've done. So what they're telling them is, give me this extra cash. And then we're going to do with that is we're going to put that on deposit and we're going to pay you like a savings account. But we want to take this cash away from you so you don't speculate with it.
Mm-hmm.
So it's up to almost $1 trillion now.
Wow.
And the reason why the banks have this excess reserve, they normally like to invest in the bond market, the 1 to 3 year bond market, but there's no auctions there because the federal government is not asking for that kind of loan. And because they have $500 billion on their treasury balance sheet. And so what they're waiting for is they're playing a game of chicken with Congress to increase the debt ceiling and to get the infrastructure bill passed. And once we get past those two things, the Treasury will start auctioning off these 1 to 3 years. The Federal Reserve will end this program. Cash will flow back into the banks. The dollar will fall, and that's going to support silver, gold, and cryptos. All cryptos are telling you it's the purest market in terms of liquidity now. And so cryptos is telling us, be careful. And then once that ends, money will flow back into cryptos, it'll flow into gold, it'll flow into silver, other precious metals, and you'll see a lift in those markets because the dollar will fall. Right. So that's kind of what it is. I hope that made sense, but it's really a banking game because the government is either going really short, like 30-day loans, or they're going really long, like 10-year and 30-year loans. But the bankers want to buy that 1 to 5 year middle because they don't want to get caught with exposures of interest rates flying up on them, and they take a big loss, on the price of the bonds. So, but it has an effect of basically draining the system of speculation money.
So crypto is somewhat the parakeet in the in the coal mine, I guess, is what you're saying. It does have this bellwether effect. It does.
Yeah, I mean, exactly, because it's the least manipulated of all the assets out there, just because it's still a growing market, and nobody and their brother wants to do a leverage short bet and have some whale come in and take them out. Because when you get taken out in crypto, you get taken out in a coffin. You know what I mean?
Right.
And so if people are selling this down, is that they feel fairly confident that they could push the price down. And you got JP Morgan and you got Morgan Stanley and those guys, Goldman, trying to put their clients into crypto now, and they don't want to overpay. So they figure if they could chase away retail and take advantage of this liquidity purge, hey, they're happy to get their clients in the high 20s, low 30s. Yeah. For the next move higher.
Yeah, I forgot who's the general manager of the ARK fund, and then they buy
Kathy Woods.
Yeah, Kathy, about $40 million worth of Bitcoin when it bottomed out. She said, "Oh, good, we'll gobble it up,"
Yeah, as long as you have what they call strong hands. I know they're afraid they call it diamond hands, but most retail don't have diamond hands. Right. They have chalk hands. Okay. and they'll sell at the first slight of loss. So if you're new to crypto, we certainly can show you how to trade it. So there's always a bull market in crypto, even if it's going down. There are strategies, and it is even strategies within the stock market. So I own Bitcoin. I buy Bitcoin a little bit every week. And so in that weakness, I was shorting through puts, Mara and Riot. And in that way, those are Bitcoin miners, and they're going to lose value if Bitcoin goes down. So this is my way in which I can grow more Bitcoin by making profit there and transferring it over to my Bitcoin stack.
Oh, there you go.
So there's a ways in which you can do things without getting fancy with shorting Bitcoin or doing their things. And there's some altcoins that are doing well, and when Bitcoin moves, altcoins that move with it, and we're on top of those things. So if you want to trade those with us, every day there's an opportunity. And the same with the stock market. There's, even in this midst of turmoil, there are opportunities. It's just that, when you see a turning point, sometimes it's good just to kind of sit on the edge and let it make a decision, and so that's kind of where things are right now. But look, it's going to be a wild ride. We're seeing a lot of similarities to what happened in 2007 and 2008.
Mm-hmm.
It's going to be a different animal of who gets hurt, but the same things are happening. We topped out on commodities in 2007, 2008. That's where we're here now. We're starting to see no doc loans in the home markets again. We've seen that 2007, 2008. I don't have to tell you about the stock market being at full price,
right? Like
they were 2000. And then we have now, what's different than 2007, 2008, we have now retail all in, and we have options we've never seen this much option activity ever. So that's going to be kind of that's like the rocket ship going up. If the rocket turns the wrong way, it'll accelerate down too.
Mm-hmm.
And so it's going to get, this market's going to get a lot more professional, if I will.
Right.
So it's going to blow retail up if they don't have a good coach and a good game plan.
Yeah, so give our viewers just a sense of what they can expect signing up with Trade Genius during this particular era, this context that we're in.
Yeah, so we don't change our approach ever. So what we've done is we've created a series of fairly effective algorithms and indicators that tell us where money is moving in terms of sectors and into stocks. And we translate those into buy and sell signals. And we teach you how to use that system. And in addition to teaching you how to use that system, you have access to communicate with us and other traders in our chat rooms. And then beyond that, you have access to the indicators for your own personal use. And then we also give you trades out every day. And we do it in the stock market. We do it in the crypto market. We even trade a thing called the binary option market, which is a fascinating market. You talk about 65% in stock. We're north of 90% in the binary market.
Wow.
Because it's a really specialized field. And we have a lot of data that helps us make really good trades in that area. And then what you come on board with us, you basically, within a couple of weeks, you learn the lingo, you learn our system, you learn the strategies, and you can start taking advantage of trades from day one while you're learning. And we always do it. So if you've been with me for 10 years, give trades out once a day, so it helps you make money even when we're waiting. Now we're just a little bit more picky. And I was telling you before the show, we think maybe there's a change happening in platinum. Okay, the car market's starting to heat back up again. Clean energy is a big thing. Hydrogen is a big thing. You need a lot of platinum for that. Uranium, I think at the end of the month is going to pop again because the Sprott is coming out with uranium funds. So they're going to pull uranium off the market. Going into the fall, I think you're going to see food stocks, corn and soybean and wheat are flying right now. You're going to see that translate into opportunities in the stock market in the food area. So there's plenty of areas that we're looking at and focusing on. And then on the short side, look, we have these strategies called bear credit spread strategies, which means you can bet on a stock not going any higher without ever buying the stock. And you don't have to be right. You just have to not be wrong, which puts that kind of a little bit more advantage. And we've been batting nearly 100% on those. We've switched gears. We talked about the trade. I don't have to buy stocks to make money in the stock market. I can show people strategies how to do that and take advantage of stocks that have gone up too far too fast, and you can make money on it as they slip back down without ever getting exposed to the stock itself. So lots of strategies, lots of way to make money, and like I said, it's not guru based. This is all math. It's all systems.
Right.
And like I said, I could go away for 2 weeks, and anybody can step in, and if they understood the system, they can call the same trades out that I would normally call.
Wow.
So it's a really good system, and it's grind your way to wealth. No Lambos here.
Right.
But good solid Fords and Chevys. So
Good solid Fords and Chevys. Awesome. We'll have the link down below under this video that people can click on. Are there any specials this month that you're offering?
yeah, we do. So 65% off any of the bundles. We put 7 of them together, Steve. So you have stocks or crypto, or you can even join our VIP room where we do a lot of option trading and day trading. And also we'll teach you more in depth how to trade, because we get to actually talk to you. And then we have just some training classes that you can just go ahead and pick any education package you want in as a bundle. 65% off.
Wow.
And then anything that's not bundled, you get 40% off. And anything that's already not pre-discounted, use the promo code. I believe it's 4th of July.
Okay.
So
excellent.
And then we're good to go. But you have to take advantage by the 17th.
By the 17th. Excellent. All right. Yes, it's just a few days. So absolutely. All right. So we're strapping ourselves in for 60 days. That's what I'm hearing the doctor saying here. So, all right. Or the pilot or the captain. Bob, thanks a lot, man. Thanks for giving us the advice. Any parting words for those who are nervous and about the future here?
Yeah, look, forearmed is forewarned, right? And for those of you who study scripture, be a Berean, and you're never going to be surprised. So, the market can't move without you knowing about it. Now they can do these dumps here and there kind of thing, but if you don't already know that the market's overvalued, then I can't help you. So you have to kind of know the seasons that you're in, and then you never have to be freaked out. But next month, if I'm on with you and my hair is slicked back, we had a big ride. So
that's right. Hopefully upward, somewhat upward. We'll see.
Oh, I'll have it spiked for you.
I'd love to see that. That'd be great. Thank you, Bob. Thank you so much. Yes, we'll see you next month. Indeed.
All right. Thanks, Steve. Thanks for having me.
You bet. God bless.
You too.